The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Editions Hour on this 14th day of April, and thank you to our hosts for the last 3 hours, and of course we hope to have a great show here for this hour, 11 o'clock till noon, and then that's followed by a terrific options hour. So let's get straight to the show. We got the Dow down 26 at 17,950. The S&P is down 4.37 at 2,088. Got the comp index down 27. That's quite a big number at 49.60. You got gold down 2. It was down much more earlier on. You've got silver at unch at 1631. Platinum's up 6, and this is very interesting. High-grade copper is just stuck in that area at the 271. Let me just have a look here because it's really important that I keep following. Yeah, it's holding, but it's not doing well. Let me just get rid of this 120-minute chart for a moment. Yeah, it's holding, not doing well. Let me repeat that. The weekly, right in the middle there, and the monthly are saying that they are being repelled from the 280s, and it has to hold 260 this week into next week. Okay, let's go on, and we've got, now this is going to be very important. Why? Because you see bonds via the 20-year Lehman T-bond fund is trading at 131.71, the TLT. It was really important that it holds in this rectangle, having made the arch formation. And this is very important for two reasons. One, excuse me, let me just again get rid of the 120-minute chart. Because the 9-period exponential moving average in the weekly chart, I'll just move that away for a moment. You see that black line? That is so important. For me, it's just one of the key ingredients to this whole thing with the interest rates. That as long as we're in this area, rates are just going to remain in a, let me just be as polite as I can. It's in a holding pattern. There you are. It's in a holding pattern. Not going strongly one way or the other. But that is very important for a number of reasons. It's what the Fed really wants. What they really want to attack right now is the dollar, and they haven't yet been able to do it. They did it momentarily earlier on. That was mid-March. Then you had a very strong rally back to almost the 135-ish level. Instead, it just reversed at 100. Yesterday, it hit, what was that exact price? Yesterday, it hit 99.99 in the index, and today it's down at 98.39, testing the 9-period exponential moving average. That's really important for a couple of reasons. One of them is that the gold contract, which is trading now at 1197, 1199, that area. What's really important about this is that when the dollar was running strongly, gold didn't dive down to retest the 1140 low. In fact, it's just held very well. Now, this is very important for 3 reasons. Number one is it allows gold to take that breather that we've been talking about many weeks. It's been many weeks already since the low back in mid-March. And what we're looking at is a situation that says there isn't real strength to the gold index, but it's not breaking down because it's done going down for this period. What it really needs is it needs to be able to hold, have the arch formation. The arch formation could even take it from this 1190s area up to the 1220s, maybe even hit the 1232, 200-period exponential moving average in the daily chart. Okay. But it's saying that I could extend this rectangle support level right there, and that's very important. Now let's go to something else. I wanted to look at the IYT. This is the transportation index. Very important for a couple of reasons. Not so much the Dow theory, and I follow Dow theory put it this way. I don't follow Dow theory. I'm aware of Dow theory, and I followed what people have said about Dow theory since the beginning of time, since the horse and carriage. I mean, it was very, very important. What's important about it now is it's one measure of the economy, but it's a rotating measure because you've got coal that is just terrible, but then you've got oil that used to be fantastic and then it just plunged. So you've got this rotation through different sectors. I wouldn't be surprised if the dry stuff is being shipped quite nicely here. Not great, but doing okay. I saw one of the shippers was holding very well. Some of the others weren't. Really important. So what I'm looking at here is I believe that there's internal support. And one of the reasons why, for my subscribers, we're slowing down over the last 2 days, going short. We've been adding some long positions or trying to add some long positions. Not everything's worked, but we're trying. And one of the things that's important, why I said today, very unusual, although I had to leave early, get my work done early to send out at 7 o'clock rather than the usual 8:35 for my final chart, which is my opening call Traders Corner. I said I'd give an update, a rare update today, 12:30, only because my suspicion is that without bad news, without the news sending, the VIX did rally quite strongly yesterday. Went from the, it was up about 6-7%, and that's a big move. But at the same time, I don't see the kind of bad news here that has the futures down 15 points in the morning, a feeble rally, and then it goes down another 7 points after that, and then tries to rally, then goes down to lower lows and closes at the low of the day. I'm seeing something quite different here. I'm seeing the rotation say that there is some kind of internal strength, and that internal strength could see us attempt at least to get to higher prices. Doesn't it to be strongly higher prices, maybe retest the recent highs? You realize I've been talking about a correction, a rotational correction for quite a while, going from the end of March into April. And the fact is that from the 3rd of March in the Dow and mid-April in the S&P, there have been no new all-time highs in those indexes. There's been, in fact, this rotation. And what I had said is, if I'm wrong about the depth of the correction going to 8 to 10% or even 12%, we might find that we're using time rather than price. Now look at the Dow chart that I'll show you right here. See, we're using time. We've made lower lows and lower highs. We've made the arch formation over there, started a second arch formation which got negated by the second cup formation. If you understand your patterns, you'll know that there are only 3 patterns you need to know. There are actually 5, but I'll call them 3 for now. Either you go up and then come down in an arch or an inverted V, or you go down and come up in a cup or a V-shaped pattern. So that's 2. It's the same thing, except that the configuration is one takes us more time as it curves around and comes down, or curves around and goes up, and the other is a little speedier, but it's the same pattern. It's going up and then coming back to the starting point. That's number 1, A and B. Or we can call them 2 different patterns. One's up, one's down. Or there's a straight line. A straight line is basically what we saw in Europe. Or if you were looking at this chart right now from the Dow 17,034 level of the 2nd of February, we went pretty much straight up with only 1 to 3 day corrections before making a new recovery high going all the way to peak E. See, this is a little different. We had 15 sessions from the high of the 2nd of March to the high of the of 18,205. I should write that in. On the 3rd of, let me just put that in here. The 3rd of March, right there. And then what happened was it pulled back quite sharply, went to a lower low, and then started to rally, and it's gone to leg B, maybe a peak B today, I don't know. And now we're up 42, up 1 in the Dow, up 165 in the S. Oh, that's upsetting. I should have done what I wanted this morning. I always promise, don't change what you're going to do. You've already thought it through. Don't change it. And I had a particular buy, the 2 buys. One has not worked out for a 1.1% loss. Still like it, but it didn't work out. And the other would have been just so far, would have been, but it's okay. What can I say? Anyway, what we're looking at here is that this repellent zone right there in the inside track between 18,000 and 30-ish, 28-ish, and the high would be 18,100. That zone has been a repellent zone, and as a result, we've got a pullback here, which has gone right to the 9-period moving average, and then under it, and now bounced nicely above it, and the MACD and stochastic are still rallying. To me, that speaks of inner strength, and regardless of the transportation index pulling back, regardless of the volatility index rallying quite strongly, the market is trying to overcome. And to me, that speaks to buying pressure still extant in the markets themselves. All right. So now let's go to this and be as clear as possible. In the different sectors, you've got the QQQ series, went to a leg B, probably a peak B today, still just a sideways move. It really needs to hit 107.06, down 43 cents. By Friday, it really needs to be tackling the 108.50s to be able to break that trend line, that resistance line. That's number one. It's the same thing in the weekly chart. Look at the series. I just love the way these come in. Is there really an explanation for this? How on earth how do the QQQs know, the PowerShares QQQ Trust Series, how does it know that from the high of 109.42 made in the week of the 6th of March, pulls back very sharply down to the 104.68 level the following week, rallies back to 109.07, pulls back, tries to rally and gets to 108.81, can't make it, pulls back even deeper and goes, and then yesterday, rallies back to 108.38. And what does that produce? It produces, just like it did earlier on, a series of lower highs that is just perfectly met by one trend line. See this dash trend line right here? From the 106.25 high in the weekly on the 28th, week of the 28th of November. Series of lower lows and lower highs. Look what we just did, the same thing. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks to a breakout. And yeah, there's been 1, 2, 3, 4, 5, 6. We're in the 6th week and haven't yet broken out to make it in a leg C, F/C, or to make this a failure pattern by really pushing down into the 103s to say, failure pattern at peak E. Look at the MACD and stochastic. MACD's negative, stochastics a little bit positive, but only at 69%, not showing real strength. And that says to me that my analysis, the original analysis that said consolidation going on late March into April, so far we're still doing that. But as I say, we'll talk about it a little bit more when we look at the IWM when I get back. Basil Chapman, Tiger Technicians Hour, Dow's up 35, S&P's up 1. We'll be right back at 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I didn't finish the E-minis. E-minis are now down 25 cents in 2086. They held the 9-period moving average. There are two patterns here that are very important. One is the cup pattern. One is the lowercase h pattern. When that succeeds, it needs to take out the left side peak of importance. It's done that. That's the first peak at 2081.75. That leaves the second of 2107. That's the challenge over the next, I would not put it more than 2 days. Today is Tuesday. Wednesday. By Thursday at my show, during this time, it needs to be above 2107. And so far, the 120-minute chart has almost fulfilled what we were looking at, was a left side, right side price time match. Let me just double check right there. And that says by 4 o'clock this afternoon, it must have held without breaking the 2073 low that was made at 2 o'clock on the 9th in the arch formation with the Chapman wave inside wedge pattern. It just missed that as well. So far, this is really good action, but it needs to within the next 2 bars, it needs to climb above 2087.75. That's going to be very important. Okay, let's go to our first caller. We've got Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm well, thank you.
Great. 2 questions. I still own the BIS, and I guess the question I've got is I can obviously put a real tight stop in and let the market take it out if that's what happens, or if there's an anticipation that I'm willing to loosen it up a little bit so I don't miss the next downturn in the IBB. I just was wondering your thoughts on how tight of a stop on the BIS, and then the second question is, if we continue to trickle up a little bit in the market over the next, let's say, month or so, do you still anticipate a double-digit correction before the end of summer, or what are your thoughts on that?
Okay, hey, that was a series of very good questions. Let me put it to you this way. I'm looking at the IBB, which is the iShares NASDAQ Biotech ETF. One of the things that we've been able to do since October, we've been able to pick pretty close to the top to be able to get really good gains in the inverse, the BIS, the inverse of the IBB. However, because my thinking was any balance should be short-lived and that we should go lower, we held it and then only took a very small gain instead of the huge 20 or 17% gain. And I decided on this last move, if taken out, that I would have a slightly different plan for my subscribers in the IBB, because the big question is this. The fund managers have been rewarded every single time. Look at the monthly chart. Every single time there's been a dip. I don't even mean a correction. I'm just talking about an intraday or intra-week. It doesn't even go a week, but an intra-something pullback. If they bought the IBB or any of those shares, most of the time they were rewarded fantastically within hours, because the IBB has been such a stalwart to the upside. My thinking here is not based on the monthly chart, but it's based on the weekly and the daily charts. That in fact a tremendous amount of the upside energy has been usurped over the last 3-4 weeks, and that there's a really good chance that at best we go a little higher in the IBB, maybe make another arch formation in the weekly chart, and then we start to head down. The big question is, do we go down to where we were back at the beginning of March, the 333 to 332-ish area, or is it just a transitory thing that's going to go sideways before there's another big burst to the upside? My suspicion, based on, I didn't have a chance to do it, but even in the Boston Globe the other day, there's another, I think I spoke about it yesterday, another one of the very big biotech companies that's trying to buy out another, to use the entire building, one of the very well-known buildings in Kenmore Square, to house their new offices. I think that everything I'm looking at says that it's an amazing area of growth. It has been the biotechs. Many of the major drugs that they are trying to produce, or at least the formulas that they've come up with, have gone through stage 2. Many of them are very close to the third stage, which is very important to have acceptance and be passed. Most importantly, what I think I'm looking at here is a kind of a maturity that says the one thing to be fearful of now is to see the big pharmaceuticals start making takeover offers for the biotechs to be able to add them to their portfolio. So I wanted to get that out as a kind of a fundamental thing that I'm looking at. So now let's go and we'll drill in on what I'd be looking at in the IBB and your position in the BIS. Can you hold on?
Absolutely.
Okay, we've got Ben in Tallahassee, and then we'll also talk about the S&P, whether there'll be a bigger dip. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So now we're looking at the IVB, which is the NASDAQ iShares Biotechnology ETF, trading at $356.90, down $1.42. What's really important about this is that the candle that's forming here in the weekly chart, this is now the second, maybe we can call it the third, 33378, 334, yep, maybe it's the third candle, is a potential peak A- failure pattern if there's a break under the 350 or close and the weekly under 352 this week or next week. And that would suggest that that H pattern that I always talk about, the lowercase h, is forming. However, because it's in the process of being formed, and this is just the second day of the week, the second hour, third hour actually, of the second day, it's so premature to call it. What I'm looking at is that the strength of the candles from let's see, from the 6th of April have been so strong. The reversal yesterday did not go negative, even though the general market turned around sharply. And today there's a give back, which is what you'd expect after a move like this. I've got it in the 120-minute chart. I've got a peak G pulling back here. It could actually have recycled. We don't know yet, but it's holding very well. So what I'm going to suggest is the BIS moves. It actually moves slowly, and then it moves very quickly. I don't have to tell you that. It's at 3180 right now. So that's actually over the original position that we had, the small position that was left that we took a tiny profit in yesterday. But what I'm going to suggest to you is, if you have the patience and the temerity, I can see it pulling back one more time, maybe to the 30.73 level. If that's within the framework of a stop that you can live with, then I'm going to suggest that maybe rather than trying to grab it again because it's rallying, and what will happen is when it does move quickly, it moves very quickly. You might have to chase it, and you'll only get it back at about the price or a little higher than what you originally had it for. I'm going to suggest that if you're able to, if you got it somewhere in the 31.19, 31.30 area, that you could put a 50 to 60 cent stop on it, because the way I'm looking at it, we are within 2 days of getting a lot of information about the IBB, which in turn will give us some information about the QQQ. And if I'm correct that the upside now, there's still enough upside to move, but it's fairly limited in the IBB, which makes a close after yesterday's candle, which makes a close above 361.94, 5 cents higher, a little bit more than $5 higher, I'm sorry. Quite important. That's where you will be taken out in the BIS. So
Good.
That's my thinking. And you know what? If you are taken out for a very small loss, it moves so well when it moves that if we're able once again to time it correctly, you'll more than make that up. But I think it's worth holding some part of the position here just in case. We're looking at it unfolding as we speak, because the MACD and stochastic and the weekly chart are suggesting the upside could be very limited, that we probably won't make a new all-time high in the IBB in this particular move. That's my thinking. I hope that helps you.
No, that helps a lot.
And then, okay, now the other question, let me get to very quickly. It's a very good question. Do I think that this rotation going on right now essentially ameliorates a bigger move to the downside? Because we've had a pretty sharp move in some of the sectors to the downside. You've been held up actually by the XLF, which even today is holding very nicely. It's only down 4 cents, but it's really not showing signs yet of leading. I think that's going to be later on, and I do think that the XLF will be a leader. So I'm of the opinion that the correction has been underway, that the real test will come this Friday at 4 o'clock. Because if the S&P fails to make that leg D in the daily by going above 2107.65, yesterday's high, that's if it doesn't do it today. If it fails to do that, but in fact starts to break under the candles of the 8th and the 9th, which had lows in the 2074, 2073 area, that'll say to me, okay, the rotation's going on, very selective moves to the upside. When I went through a big scan the whole of yesterday and last night, I was seeing way more stocks that had the potential to move down from here than up. So my bias in the newsletter is a little. Sorry,
maybe
what?
A better question, Basil, is if we don't have it now, do you see it later, or do you feel it's either going to happen now?
Okay.
Or
Your question is, do I see in the next, doesn't matter whether it's the next week or the next 2 or 3 months, do I see a double-digit decline? That's
Right.
really the question. Let me
Correct.
put it this way. At this particular stage, I still think that the correction is unfolding, and the levels that I just discussed are very important. Let me tell you why I'm wavering just a tad. You saw what happened in the Nikkei, the Japanese Nikkei, and the Hong Kong, and the FXI. Well, I'm still talking, as you might know, about an accelerated move in the general market, where we start seeing people at parties talking about, like in 1999, 2000. I still believe that if there's going to be a major top in this market, we have to get the general public in. So the answer to your question is, yes, I see higher prices. How deep we correct depends, because if we break out now, we might start to see that acceleration in this phase. My thinking was it had to hold off for a spring decline and a summer big rally. So I'm going to hold to that thinking, and it'll unfold as the weeks go on. But that's my thinking, that we're in a correction right now, and if we accelerate into Dow, 18,500s within the next 2-3 weeks, you're going to force people into this market like we haven't seen since 1999, 2000. So I'm hoping that we don't do that now, that we have the pullback. If it's time, that's fine. I would like to see time and price. Hope that answers your question to a certain extent.
Yeah, it's been a pretty frustrating market for our technical traders, hasn't it?
Yeah, especially if you have been trading and you haven't just been buying and holding, which ironically enough has been the perfect thing for this entire market. Just buy the S&P or the Dow, just go to sleep and say, hey, wake me up when the Fed raises interest rates 6 months after the Fed raises rates. I mean, that's basically, I think, what you've got to be thinking. But anyway, we'll deal with that.
Yeah. All right. Thanks, Basil.
Thank you. I appreciate your call. That's Ben Tallahassee. Let's go to Brent in Martinez, California. We're going right to the other side of the country. Yes, Brent.
Hey, Basil, how are you today?
I'm well, thank you.
Very good. I have a new pick for you today.
You know, it's so funny that you've got FRO, Frontline Limited. I saw this about 4 days ago, it was purely by accident. I meant to type something else, and I typed in FRO, and I said, I haven't looked at Frontline in ages. And it was just sitting there doing nothing. But I looked closely, and I said, wait a minute, the technicals are starting to improve. Why hasn't the price moved? And then, bam, out of the blue on the 10th, it spikes, it goes down to the 217 level, nothing, and then boom, on the 10th it goes to 267, 13th it goes to 294, and today it's at 297. Wow, did you get this?
I did. You know what's funny, Basil, is the other day, it was on Friday, I bought it. I'm getting feedback, I know, but anyway.
Wow, that's great. ABC and fail. Yep.
Yeah, so I bought it the day you were talking about LinkedIn.
Yes.
And so if you look at the right-hand side of the chart, they're very similar. And so I bought it at 245, and that's they kind of made that pop.
Well, let me just tell you that the timing couldn't have been more perfect, because if it went another day or two, just meandering, it would have used up all that energy. But instead, what happened is it used it to accelerate up. The weekly chart says every time that Frontline, what the heck do they do?
It's a shipping company.
It is a shipping company. Okay. All right. I forgot. That's right. Frontline Shipping Company. A, B, C. Oh, look how many times it goes to D once it starts its big move. A, B, C, D. And I looked at the shippers last night and I thought, I forgot all about Frontline being a shipping company. And I looked at some of the others, and some were terrible. And one or two were looking quite good. You know what? I'm going to say nothing. You're the boss. You got into this perfectly. I think it's looking very good. The 120-minute chart says 277 is good support. If it breaks under 277, it's still got good support at 270, 260 above your entry point. 253 is the 200-period exponential moving average. I think you've got the timing on this very well. And I don't really want to get in the way, other than to say to you, the way it moves very often is that once it starts its move up, it can have pullbacks, but it makes higher highs and higher lows. If that's the case now, the resistance it needs to take out is 308, the high of the week of the 13th, of February. And if it does that, there's a real good chance it's going to make a U-shaped pattern, and it's going to get into the bar of the 23rd of January, which had a high of 367. So I think this is terrific right now. Great entry point, and your risk reward is really nice, because you could take a part of it and treat it as a trading situation, that if it bounces now to say $3.07, you could take some off and just put it in and say, at 283, I want to buy it back. Very little risk reward, and just keep doing that so that you trade the legs to the upside, but you hold the core position. Or you could just say, hey, you know what? I got in great. I'm just going to hold it and see where it goes, because it needs the weekly to improve technically. The daily should do that. If by Friday it is holding above 270, and preferably just once this week, it needs to spike to 305, and then it can pull back. So far it's acting well. Hey, congratulations.
Yeah, thank you, Basil. Fortunately, on this one, I have actually own shares and I have some options on it as well.
Oh, so if you have options on it, um, so if you have options so you might want to treat one as the core position and one as the trading part of it, or you could even mix a little bit of this and a little bit of that. But it now gives you great options on your options.
Yes. Yeah, I have the August $3 calls on it.
Oh, August, and you must have paid about 60 cents for them?
No, they were 43 cents I paid.
Oh, you got them right down at the bottom. Oh, that's very good. Okay. I don't need to tell you, you're the master of this trade. My only suggestion is that because it can have quick and sharp pullbacks, you might want to just be thinking of skimming off a little bit to take profits to guarantee that at some point you might even have. Good point. Terry in the Den says tankers doing better than dry bulk shippers. Good point. That's kind of the point I was trying to make a little earlier about the difference between in the oil, in the what was that? Oh, the transportation area. So that's a good point. Okay. Thank you for calling. I appreciate that.
Oh, it's always a pleasure talking to you, Basil. You take care, and I'll talk to you soon.
Thank you, Brent. Brent Martinez, California. We're going to go all the way back to Florida. We're going to Max in Fort Lauderdale. Max, how are you?
Hi. Hello, Basil.
How you doing?
Fine. I'm looking at WBA. I had it way down at around 68, and I sold about half my position when it got up to around 87. When it was like those dojies up there, and I missed another entry. I like to see what your wave count is. I might, because it's making dojies here, I might add a little bit here.
You know, first of all, Walgreen, I forgot all about it. Boots Alliance Inc. I forgot about the relationship there. And I've been fascinated with the CVS, Walgreens, Rite Aid, the whole area. I guess maybe we can't put them into the same category. But there again, I think there's slight differences. But the way that these guys are acting, there's something going on in that. Maybe it's the payment system. I'm not sure what it is. But they've had a tremendous move to the upside, and that says to me that your holding of a core position is fabulous because you've been rewarded on two fronts. You've been rewarded because the price has been a leader type price in the general market, because these are the guys. It isn't the high techs. It is the Walgreens, the CVS. Let me see what CVS is doing right now. And of course, CVS is Caremark as well, right? So let me see if I can get their CVS. I just typed it on the chart by mistake. CVS. Yep, there it is. CVS is just turning down a little bit, having a digestive phase. So let's go back to WBA, trading at 91.75. Up 4 cents. Now, because you took really good profits and it's only 4 points higher, I'm going to make two suggestions for you. One is I've got it going sideways at a peak E in the daily chart, but it really could actually be a new leg A, a peak A to the upside. I was just being conservative about that. And there's nothing technically wrong about it in the daily. It's the weekly and monthly chart that really impressed me. And this is why, and you were correct in talking about the doji potential. Can you hold on, Max?
Yes.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. We're back with Max in Fort Lauderdale, and we're looking at WBA. So, Max, normally what I would say to you, you've got your core position, because I think it can go higher, but it doesn't have to go all that much higher. And I know that you're looking for, it sounds to me like you're looking for a longer term position. I would normally say to you, why don't you just start a little position right now? It's going to give you a really good feeling, because if it breaks out above the high of the 9th, above 93.42, it's kind of making a base, and that's going to give you a good feeling for adding to it. But because you took your profits, I don't want you to give back 2-3 points while we're waiting to see if it's going to test the 89.75 level. So how about this? You might miss 1 or 2 points. Well, it'll be more. It'll be maybe 3 points to the upside. But I'd rather have you miss 3 points to the upside than to take the chance of losing 2-3 points now and then waiting to see whether or not it's going to hold and have another move to the upside. So why don't we do this? Today is Tuesday. If you're able to call me Thursday or Friday, let's look at it again, and I believe at that point I'll have a much better feeling for whether or not to add it, because it's in a leading position in the market, and then more players will want to come in to buy it, because stocks going to new highs continue to go to new highs until that trend changes. So one of two things: either you could just add a small position now, it's more just to be back in the game as with a trading position, or looking at it as if, look, I want 6 to 8 or 10 weeks worth of upside action. Let's see how the next pullback holds. So those are my two areas that I would be doing it. Does that help you?
Yes, and the weekly, looking at the weekly, it doesn't look like a G to me.
It doesn't. It looks more like a C. It looks like it still needs to fulfill the D. That's the reason why I would want you to think about maybe just adding a little position now, which you might add to even more if it pulls back. But waiting 2-3 days is not a big deal. But those are my thinking is that this is a stock that wants to go to the 94.50 to 96.20 area. Whether it does it now or later, I'm not sure. But you might risk 2 points to the downside. That's really my thinking.
And a Kramerism is once it gets over 90, it's going to hit 100.
Well, I don't. My theory is once it gets over 95, 103 to 105 would be the next area. That's right. It doesn't have to be right away, but that's the way they usually work. So let's look at it, if you don't mind. Let's look at it again, maybe Thursday or so. Okay?
Thank you.
Thank you. All right, let's go. Thank you very much for calling. Let's go to Dan in Baskin Ridge. Dan, how are you?
Yeah, doing well, Basil.
Good.
Just a quick thing. I was wondering if, for a long shot on IBB, that if it ever does go down, with the low VIX, if we could pick up some puts on that.
Yes, that's a great idea, and I mentioned it yesterday in my newsletter that we'll be looking to have further out and maybe even out the money, I'm not sure yet, puts on IBB. I don't want to do it just yet. And you know what's so interesting? I almost thought about going long the IBB this morning on any pullback. Why? Because I see internal strength in the fund managers, not in the stock itself. They're still trying to grab it. And when it just gets exhausted, I think that's when it comes down again. But I didn't want to because I actually don't see it going much higher than 63 to 360. 550. We'll see. I'm going to watch it real closely. But yes, that's the idea because I believe that at some point in the next 2 months, this thing will be a lot lower. We'll see. Have patience.
Thank you very much.
Thank you for calling, Dan. So let me just do this before we go to the options hour. You've got Chad coming on, I believe. Great options hour. Let me just do this. I had a question from Paul about Apple. He didn't quite agree with me. I think Apple's kind of stuck here. I just think it's not leading. But absolutely, it's a big waiting in the queues. And we'll see what happens. If Apple breaks, it's at 126. If it breaks into the 129 area, it could still go higher. But boy, if it breaks under 124, I say be careful of Apple. And the other thing was WWE. I wouldn't be touching it right now. Hey, folks, thanks for being.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.